Hey, what's going on, everybody? I haven't seen you in a long time, or I haven't been in front of the camera in a long time, probably maybe even a year. I can't even remember myself, but it's been a crazy year with ERC. And, usually I'm not one of those people that just constantly, post videos just for the sake of posting videos and trying to influence the community all day long. That's not really what I do. I basically am a practitioner that likes to just lay out the facts as they come in and provides a resource to everybody, especially with the relation to ERC. That's been the big focus over the last few years, and one of the primary reasons why I've been posting these videos since the beginning and showing people how to calculate the most accurate ERC credit they can basically get. And that's kind of turned into a very interesting cottage profession for me as of late in the last couple of years. And huge news came out yesterday, and that's why I'm posting this video on the corporate extension tax deadline. But I wanted to get it out there because it's just so big. If you haven't already heard, ERC has been effectively shut down by the IRS temporarily, is what they say. Let me refer back to my notes a little bit here. So, if you're on Twitter or social media, or, you have your news sources, you probably have already heard of this. If you haven't, I'm sorry to break the news. If you're a CPA or an accountant out there that was delaying and didn't reach out to me or find another qualified referral source, then unfortunately, you're going to have to wait a little longer. And we don't know if it's even going to make a comeback, or if it's going to come back, if it's going to be the same process. So that's the big news. Commissioner Werfel has already stated, due to fraud and abuse and the billions of dollars that have potentially been claimed fraudulently, they decided to just shut it down. He said until at least no sooner than 12/31 of 2023, which means it's going to get pushed out to 2024. Of course, we're also up against the 2020 credit deadline of April 15th of 2024. So they're looking for any opportunity to just kill this. They know that they rolled it out haphazardly with very little guidance, provided a lot of opportunity for inexperienced and unscrupulous, dubious marketing promoters to enter the game and launch their operations and make billions and billions of dollars fraudulently. So that's the big news, and I wanted to just present that to you. And then, just a look at my notes here. What do I think is going to happen? I personally, I never understood the loose, the loose standards related to ERC and how you filed the 941X. My suspicion is they'll probably update the form like they did to include the ERTC in the beginning. I'll bet they'll have some kind of like the liability section in the 941. Maybe they'll add a section to add in your gross receipts. I don't know. I'm just speculating. This is what I would do, is add some kind of section where you have to enter gross receipts, and then that way it's easier for them to do the calculation based on gross receipts at a minimum. They've already come out with, I think it's 2023-005, which is the recent memorandum by the IRS, again reinforcing how you need to be looking at supply chain issues. I personally have avoided those types of cases because vague, and especially if a client didn't lose any revenue, this is what the IRS is going to be going after. This is what they're going to be aggressively looking at, and very dangerous waters. If you did make a claim and your promoter, whoever helped you, file ERC cases, even though your revenue didn't drop, you have risk and exposure. There is no question about it. The IRS is also going to be offering an opportunity to withdraw. If you haven't received your money yet and you're in process, you can withdraw without penalties and interest, is my understanding, your claim, and that therefore saving yourself from the risk of basically being accused of tax fraud and getting potentially charged criminally. So these are huge things going on, and we're not talking about small dollars. I mean, we're not talking about, you know, a child tax credit or a dependent care credit or something. We're talking about tens of thousands of dollars. So if the fraud is that big, you're at serious risk. So what does that mean? And actually, before I get to that, if you are a tax pro also, and you know, this is not an indictment. So many of my colleagues did this, and I was always frustrated with them too, that I didn't understand why they just take a little bit of time, even with me, because I've been doing this from the beginning. Just spend 10 minutes on the phone during the summertime or whatever. I know today is a huge deadline for everybody, but I'm still making the time to do this video because it's very important. But I never understood why they never, you know, really looked into the Circular 230 regulations related to their responsibility to provide correct guidance for their clients. And then, you know, as a result, clients went to these promoters because they couldn't find their accountant to do it for them. These promoters basically, you know, told these people and business owners that they qualify no matter what, pretty much, or supply chain qualifies you, you know, no matter what. Well, now what's happening, since as a tax pro, you decided to just, you know, take a back seat to this, your client goes to an ERC promoter, they file and get their money. Now the client comes back to you, you know, and you probably knew that they didn't qualify anyway. Maybe you told them that already and they just still went to an ERC mill anyway. Now they come back to you to amend their 2021 and 2020 and 2021. What are you supposed to do? Well, if you look at Circular 230, I think it's section 10.1034, it says a practitioner may not willfully, recklessly, or through gross incompetence sign a tax return or claim for refund that the practitioner knows or reasonably knows reasonably should know contains a position that lacks reasonable basis, is unreasonable position, and, you know, pursuant to IRC code and everything else. So that's a huge problem that's been bubbling up. I know firms out there were actually cherry picking the credits. So they were actually just doing the amended returns for clients that may have qualified under gross receipts. But for those periods that didn't qualify under gross receipts, they actually referred it out to an affiliate to assist the client in you know, seeing if there's any opportunities under supply chain or partial shutdown rules. Well, that turns out to be extremely self-serving and a conflict of interest, obviously, because they should have assessed the case in total and issued you know, their advice and opinion on the entire case. They shouldn't have been cherry picking. Those people who did that are potentially at, you know, risk of ethics violations as well, and which could open you up, obviously, to other things, client related and compliance related. So we have that going on. So what is the point of all this? You know, I'm still selling, or I was more or less consistently selling the spreadsheet that I've, you know, obviously produced and created, which I didn't expect to sell. I think most of you know that. I was actually just providing videos showing people how to set up a template. And then people started asking me if they could just buy the template I was trying to teach them how to create. So, you know, it's been great experience for me to be able to do that, and really humbling. And you know, to that clients, you know, people wanted to buy my spreadsheet instead of just trying to follow my videos. So, you know, that's been really humbling. Now we're going to enter another phase of this, though. So if you were sitting on the fence, or you went to the ERC mill, or you didn't buy my spreadsheet, not that there's so many thousands of people that are, I don't think there's a lot of people doing what I'm doing as far as having I think I'm probably the only one marketing this kind of robust calculator in the country right now, which is shocking to me, but so many things about this credit are shocking. So I can't, but there are a lot of pundits and people speaking about it and doing what they're doing. But I think we're going to enter a new phase now. So I've sold hundreds, no complaints. Everyone's extremely happy with it. Whoever did have some questions, I was always available to answer their questions. Well, this spreadsheet, which I just discounted because now we're kind of reaching the end of this credit phase, and 2020 is going to be expiring in April. We don't know. And now there's a complete shutdown moratorium on processing new claims. They are not processing their backlog by 600,000 returns, and they're going to probably be installing all kinds of new controls, and like I said before, probably adding something to the 941X to add a little bit more information, have you put some more information in there in terms of qualification. But we're going to be entering the next phase, and the next phase is going to be who got this credit. Should they have gotten the credit? Was the credit calculated properly? I will tell you this, I've seen it with my own eyes. There are people out there doing credit without coordinating PPP. There are people doing the credits based on only quarterly wages. Me personally, I think that's wrong, because you are not really taking the correct amount of wages inside of a given period when you receive PPP. So if you only have the quarterly numbers from a unemployment report or wherever you're getting it from, well, really where that comes into play is if you had wages less than the maximum for the quarter or the year for 2020. So if you have wages that are less, how are you going to split that up? If you have 10,000 and less in wages, how are you going to split that up? So again, people just running amok, not careful with calculations. So you have a couple of different things here I just wanted to convey. If you don't have a method or process to calculate this effectively, and 2020 is one of the hardest ones. Now we're talking about amending returns. As people get their money, are you going to go back and amend? Can you, what about verification, double checking the other people's work? This is what we do. Maybe if your client does qualify properly through gross receipts, maybe the ERC promoter didn't even do the proper calculation. So you have an opportunity to, not be a hero, but definitely show your value to your clients by saying, hey, you know what, this person did it like this, but this is so wrong. And, maybe you're due another $5,000 or $10,000 and you definitely qualify, and so on and so forth. So there's great opportunities, and also there's opportunities for risk assessment. So even if they didn't qualify, one of the things you could tell your client is, well, I told you didn't qualify, but let's just take a look at how they even calculated it. They were wrong. They didn't even calculate it right. You were unqualified. They're wrong on so many levels. Well, guess what? Now, and this is what I'm going to be curious about moving forward: lawsuits, people filing lawsuits against these ERC mills who didn't properly qualify and also prepared incorrect calculations. So I think that, the reason why I'm here is to give everybody an update, but also really motivate you. If you don't have a calculator, just call me, buy it. I think I know I have it listed for $4.99. It's dirt cheap. This is not me. I'm not getting rich off of this. I will tell you that. I mean, I have made some nice extra money, which has helped me because during COVID, my revenue tanked. I mean, it really went down, especially in the Chicago area. And, our business has been more or less, non-existent in terms of new startups and things like that. So I'm not here to self-promote necessarily, just for the sake of self-promoting. I really want people, based on the feedback I've gotten, people have really benefited tremendously from the calculator and the worksheet and calling me and discussing their cases. So now, what if you're a business owner? What are the things that you need to look at as far as your options now? You're a business owner. You have a good sense that maybe you didn't qualify and you shouldn't have qualified and you have all this money. Well, you are in a risk pool right now. You are absolutely at risk. So the question is going to be, what do? You have, the IRS has said you have an opportunity to withdraw your claim if you haven't received your money yet. So you can do that. You also have an opportunity to re-examine your claim from A to Z. And that's why I'm here. I'm here to actually present myself again to help you do that. If you followed me and you still went somewhere else, or you had your accountant do it, give me a call. And, again, I'm not charging a huge amount of money for this, but it is critical that you understand what your risk is, number one, what your options are, maybe to pay back. Are you going to amend or not? Who's going to amend? And if there's a conflict of interest and your accountant told you that you didn't qualify, and you go back to them and they might tell you, go somewhere else now. That's what's going to happen, because they'd be in violation of Circular 230. If, since they told you and they knew that you didn't qualify, they technically wouldn't be able to sign off on that return. That's my interpretation of it. That's the black and white interpretation of it. If you just Google Circular 230 and go to section 1034, this is the standard we've all operated on, or most of us at least, to try and do the right thing for ourselves and for our clients. So that's really all I really wanted to provide. And, you know, again, you know, you see my video, my other video where it's the #1 ERTC spreadsheet. Like and follow if you can for more. I'm going to have more updates as this news becomes more clear as far as updated guidance and whatnot. But don't wait anymore to implement something. We all buy software. We don't always want to buy software, but we know it's a useful tool. And I think I have it priced right for everybody, whether you're a tax pro or a business owner that just wants to do a double check on your case and reassess it for your own sake and figure out your risk exposure, you know, what kinds of things that you need to be prepared for, look out for, those types of things. Give me a call. You know, my email's in the comment section or in the description, and or definitely buy the spreadsheet. It's not that expensive, and it's going to help you tremendously. I wouldn't be promoting it if it didn't help hundreds of people, including in my own cases. It's great. I don't know how I did it, but I'm happy I did. I don't think I'll be able to ever do it again. All right, everybody. Well, look, have a great weekend. And for all the tax pros, good luck today and through 10/15. And I'll talk to you all soon. Take care. Bye.